Greetings, everyone, and welcome to the Prince George's Community Federal Credit Union 2022 Student Advantage Webinar Series. Today's presentation is brought to you in partnership with Coffee, a nationwide financial coaching and education center focusing on improving the financial health of individuals. As the premier credit union of Prince George's County, we have joined with Coffee to expand our mission of providing quality financial education to our community and lending insight into credit management, home ownership, and money management. Prince George's Community Federal Credit Union is a full-service financial institution serving anyone who lives, works, or worships in Prince George's County, Maryland. We are one of the county's best kept secrets, with competitive loan and savings rates, as well as discounts to national retailers. We currently serve over 17,000 members in the area and welcome you to come and experience the benefits of membership as well. Later in the presentation, we will display our contact information so that you may contact us with any specific questions you may have concerning your financial needs. In celebration of April being National Financial Literacy Month, we are proud to be able to present these webinars and other products to help guide young adults throughout their financial journey. Lastly, today's presentation is available for viewing at www.princegeorgescfcu.org/studentadvantage. And with that, I will turn it over once again to Ms. Doris Baker.
Thank you so much, Gerald, and thank you everyone for joining the webinar today titled Banking 101. First, to start off with, we want to just describe the three most popular types of financial institutions and give the definitions for each that you see there on your screen. First, you have your bank, which you can have a traditional bank. You can have a commercial bank, and you can also have something that's called a community bank, but you see the definition for each there. Also, there is credit union, which Prince George's Community is a federal credit union. So you can see the difference there between a bank and a credit union based upon the definitions. And of course, there is online bank that does not have a brick and mortar or building per se for you to visit, but it is all done virtually. All of the transactions and everything are handled online. So now, since we know the 3 or 4 different types of financial institutions, let's move on to type of accounts. First, you would have your savings and or share account is what it's usually called at a credit union. You have what we know as a checking account, and you can see there the definition of your checking account. It's an account that allows you to deposit money and withdraw money from a protected account. You can use checks to pay for debts and use a debit card for electronic payments. So if you have a debit card, most likely you have what's called a checking account. Then we have a money market account, and these are accounts offered by banks and credit unions as well, and typically pays you a higher rate of interest than a regular savings or shared account. And then of course you have something called CDs, or certificates of deposits. And the bank or credit union holds your money for a set period of time, usually 1 to 6 months or from 1 to 5 years. And unlike a normal savings account, you may not withdraw your money willy-nilly at any time you like, because if you do, you will be subject to withdrawal fees and penalties for withdrawing money from these accounts. Now, one thing I want to let you know that whenever you're opening an account, you would need to provide information to the bank. I mean, that's a no-brainer, but some people may say, how do I go about opening either of these type of accounts listed on the screen? The banker will ask for your name, your date of birth, your address, social security number. They will also require you to provide some type of federally or government issued ID, be it a driver's license, a passport, something to that effect. With a checking account, and especially for students, you will get a savings account, and usually for free. And also for both of them, you will get some type of leisure in order to keep track of your money coming in and going out. And of course, with the online banking and online banking apps, you are able to keep track of your money in that way. However, I'm old school, and I always think it's very good to have something whereby you write what you're doing down, write your transactions down. Moving on to the next screen. Knowing that anytime you deposit your funds, that they are federally insured. Now, the information shown on your screen refers to the FDIC, which is your Federal Deposit Insurance Corporation. Anytime you visit a commercial, community, or traditional bank, you should always look to see this symbol inside the window, the front door, somewhere very visible on the desk of the bankers, at the teller line. Somewhere you should see this sign that lets you know that your funds are FDIC insured. What this means is the Federal Deposit Insurance Corporation. And this is a United States government corporation providing deposit insurance to depositors in United States commercial banks and savings institutions. Now, I think it's good to let you know that a credit union is not usually covered by FDIC. However, it does have something very similar, synonymous with it, and it is NCUA. Okay, with that being said, the FDIC, back to that, was created by the 1933 Banking Act, and it enacted during the Great Depression to restore trust in the American banking system. The standard deposit insurance coverage limit is $250,000 per depositor per FDIC insured bank per ownership category. For more information, I would say to you to please Google FDIC, and while you're at it, please Google NCUA as well. Let's move on to some definitions for some common banking terms. So, of course, we have ATM. We know that that is for automated teller machine. This allows you to access basic bank services. Say that 2 times really fast, okay? Basic bank services using your card. A check is a written order directing the bank to pay money as instructed. A debit card, a payment card that deducts money directly from a consumer's account to pay for a purchase or service. Next, you have ACH transaction, and that's called automated clearinghouse transaction. And it uses magnetic ink character recognition, which is sometimes referred to as MICR, MICR, line at the bottom of a consumer's check for a transaction. Then you have check clearing for the 21st Century Act. And this is facilitated electronic check collection by introducing a new negotiable instrument called a substitute check. And all that's saying in a whole lot of words is is that there are now computer programs that are in place between retailers and between the clearinghouse of banking institutions, where as soon as you go somewhere or you pay a bill and your check information is put through, it seems like magic, and overnight the funds are taken from the checking account. That's because it goes through this clearinghouse and everything is basically done electronically. That's the way to go. Let's take a look at our next slide, which we're going to talk a little bit about checks. Now you can see here from our definition, simply put, a check is a way of communicating with your bank what you want done with your money. When you write a check, you're letting your bank know that you want to transfer a specific amount of money from your checking account to another person or organizations. Checks are almost becoming obsolete, but they are still around, but they're not as plenteous, or you don't see them as frequently as times pass. So just to give you an introduction to checks, let's look at the next page and see the different areas of a check. So every check is going to have these identifying sections of the check. Every check should have your personal information. Every check should have a date column, should have a check number. All of this in order to be negotiable. Paid to the order of, with an amount that is to be written numerically. Then there is a line for the amount to be written out, alpha, okay, in letters. Of course, there is going to be a memo section. There's going to be a signature line. And down to the bottom there, you're going to have several groups of numbers. The first being your routing number, which is going to identify your financial institution. The account number, which is going to identify your specific account. And of course, the check number, which identifies and should match the check number notated on the top of the check. In my example, I see it doesn't, but it should. So moving on to the next screen, we see in about 4 steps here how we should write a check. So we see first, we're going to use the date, should be a current date and not post-dated check. Who we are paying to the order of, the numeric amount, the alpha amount, which is called the negotiable amount. The bank or credit union is usually going to look here in order to pay the check, okay? Moving to the next screen shows what we should use the memo line for. And that's for reference to the account number or exactly what you're using that check for. And of course, the check is not negotiable, should not be negotiable unless it's signed. Moving on to the next screen is just an exercise that you can use. You can go and Google blank check, get an image of a blank check, and you can use this exercise to practice writing a check if you've never written a check for. And I venture to, if you've never written a check before, rather, and I venture to say that a lot of our young people probably have not written a check before in their lives because it's somewhat passe, for lack of a better word. But moving on to the next slide. Now, 2 main reasons for using checks instead of cash. Checks are considered convenient and they're considered safe. Cash cannot be replaced if it's lost or stolen, whereby checks possibly, I'm going to put possibly can. And in most instances, your check can be replaced if it's lost or stolen. There's a procedure one must go through, but it can be replaced. Whereas if you lose your cash, you are just out of luck. Let's talk about debit cards by moving on to our next slide. Now, most accounts come when you open an account, you're able to order a debit card, usually for your checking account, or an ATM card in most cases is assigned to a share or a savings account. They are convenient and they're easy to use, but it can be difficult to remember to write down your transactions because it's just so easy to swipe. Now, the slide you see before you simply shows all the different areas of your debit cards. And it's going to be the same on your ATM card as well. Okay. And sometimes you have the option with your debit card to withdraw monies either from your checking or your savings / share account. But these are just the identifying areas of your debit card. Let's move on to our next slide and talk about something that is very popular, and that's mobile banking. Let's talk about the Apple Pay, Android Pay, and Samsung Pay. Now, how this works is that card information is never collected by the merchant. Instead, each of these services tokenizes account information. When you make a new transaction, your account is represented by a random transaction code. For additional security, make sure your device's lock screen is password enabled with a PIN, with a fingerprint, facial recognition, or other methods. So don't make it so easy for someone to use your Apple and Android or Samsung Pay should you lose your device. Okay, let's talk a little bit about mobile banking apps. They're offered by banks, credit unions, most any financial institution. Generally, they'll allow you full online account access. I don't know where my life would be without my mobile banking app. And then you have your mobile payment services, okay? Your Venmo, your Cash App, and your Zelle. These are things that are very convenient. Sometimes different app on your phone, especially when it comes to Venmo and Cash App. Zelle, for my particular financial institution, is loaded within my online banking or within my app itself. Again, these are things that you have to be very careful with, that you have to ensure that they are locked. We hear a lot about people that have the Cash App, the app on the phone, the Zelle on the phone, don't close it out properly. Someone asks to borrow your phone, and the next thing you know that they've Cash Apped or sent themselves money, okay? And we want to avoid that by having some type of authentication method, a second method, before we can just arbitrarily send money using those mobile payment services. Let's talk about depositing money into an account by going to the next slide. So here are the ways by which money can be deposited into your checking and savings or share account, or any bank account for that matter. You can physically go into the bank, which I believe may be seeing less and less traffic now. Of course, a very popular way, especially for those that are employed, is direct deposit. never visiting the bank because your pay is automatically deposited into your designated account, transferring from another account. All of this can usually be done online. You just transfer, you can even transfer from one financial institution to another online, some more seamlessly than others, but it's still something that can be done. And then the good old mobile deposit, where you take a picture front and back of any check that you may have to deposit, and voila, usually overnight the funds are available. But just for the record, these are the 4 ways by which monies can be deposited into an account. Let's talk about managing your account as we move to the next slide. Okay, remember I said I was old school. So I have here, write down every deposit, write down every withdrawal and fee charge to your account. I know that that's old school, but if you have a way in order to do this so that you don't ever come up short and get charged overdraft fees, which can range from anywhere from $30 on up, and then you can use those means. You just need to make sure you're keeping track of what's coming in and what's going out of your account. Daily viewing of your online banking account may be another way. That's a little bit more new school than writing everything down. But listen, if you fail to accurately track your account, you may find that your account is overdrawn, didn't I just say it, or that you have insufficient funds. You will be charged fees for writing bad checks, and you can be fined, and in some areas put in jail for careless and criminal behavior for writing bad checks. So if this is your normal way of life, continually not keeping track and properly managing your account, and this becomes a way of life, you could face jail time for repeatedly writing bad checks, especially if you don't make them good. Okay, moving on to more account management, okay? Listen, managing your accounts will help you to build financial independence. You'll avoid spending money on unnecessary fees by practicing good management skills. It will allow you to keep accurate records to avoid overdraft and hot check, or depending on where you're from, you may say bounce check charges, okay? These are the benefits of managing your account properly. Let's have a little quick recap as I come to my close here. Okay, so what is a credit union? We had that definition at the very beginning. You can see there's a co-op financial institution that is owned and controlled by the people who uses its services. Okay, that is a credit union, like Prince George's Communities Federal Credit Union. That's what that is. Is it okay to write a hot check, or let's say a bad check? Absolutely not, because you'll be charged fees and you can face charges or jail time. Okay, it's never good to write a hot check. What is the memo line on your check used for? It's notes about the transaction. So if you're writing a check to someone for lawn care, snow removal, whatever the case may be, that information would go there on that memo line. How do you deposit into an online account? Okay, so you have several ways. You can do the mobile deposit, direct deposit, or you transfer from another account, of course, online. Okay, that concludes my presentation. I'm going to hand it back over to Gerald. And again, thank you all for joining today. Gerald?
All right. Once again, thank you, Doris, for continuously working with us and putting out these great webinars and other video content for people to consume and learn more. And I want to thank everyone who attended today. This would wrap up our Student Advantage webinar series. And if you'd like to learn more about Prince George's Community Federal Credit Union, or if you'd like to speak to a member service representative, you can visit www.princegeorgescfcu.org, or you can call us at 800-952-7428. We'd like to once again thank Doris for everything she does, and we'd like to thank Coffee for their continued support. If you'd like to schedule a free 60-minute financial coaching session, you can contact Coffee at 866-459-5165. And with that, we wish you a great rest of the day and week, wherever you are in this beautiful world. And thank you once again.